Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone is having a great Monday morning. We're kicking off this morning with a look at what we've got going on in the S&P and taking a peek at the early, actually this is a really cool, let me show y'all something here. All right. So this is what happened from Sunday, right? The Sunday opened, slight gap up. And if you are someone who likes to watch the pre-market, this is a pre-market show. So if you watch someone that likes to watch a pre-market, please don't think what happens in the pre-market is necessarily what's going to happen during the US trading session, right? Once we hit 9:30 Eastern. However, there are a couple cool times to keep an eye on this chart. So if you're ever curious about it, let me grab my drawing tools here. You want to know, am I watching the entire pre-market? Who's trading? What does it matter, etc.? Here's a couple really easy hints. The pre-market really gets going around 8 p.m. So this is Sunday. This was Friday's action right back in here, right? Here's that tiny little gap. So by 8 p.m., you really have the full Asian session going. So you've got Auckland, Sydney, Tokyo, Hong Kong, Singapore. And that means you've got really multiple financial center participation. And then, of course, as the day goes on, the sun is always rising or setting on some financial center. So now you get to 2 a.m., and that's Monday morning for us, right, here on the East Coast of the U.S. It's 2 a.m. in the morning, but it's the beginning of the European trading session. So think Paris, Frankfurt. Another hour later, this is London. Now, for those of you that were Forex traders, or maybe are, I was primarily for many years, I still keep an eye on it. This is really your 800-pound gorilla, the UK market starting up the session. And you can see there, 3 a.m. And it doesn't mean that there's going to necessarily be action happening, but you want to then look up, say, okay, what happened at these times? Is there something significant in terms of a trend that finally, notice the trend started moving lower shortly after the full participation of the Asian session, right? Okay, so then the next thing we want to look at is 4 a.m. And this is all East Coast time, gang. It's all Eastern time. That's the language of the markets, gang. 4 a.m. And then now we have the Asian close. So what opened fully here is pretty much closed in here. So there's a financial center leaving. And then we end up with this interesting 4-hour kind of 3-hour stretch as the European and the UK markets are waiting for US to pour their first cup of coffee. That's going to happen right there around 7 a.m. And of course, we know 9:30 is when everything gets going. But there's a lot happening, right? There's a lot happening before the Wall Street bell. And frankly, there's plenty happening after the Wall Street bell as well. So this is how you would look at the morning. And then if you wanted to take another bit of a deep dive, is you could look at the volume based on price around each one of those times. Did that pick up? So volume based on price is not time-based volume. It's not what kind of volume do we get at 8 p.m. or 4 a.m. It's what price levels have the most volume. And that's where a lot of you might be familiar with what I've been teaching for a long time, things like an anchored VWAP, things like the V-score, right? Things like your point of control, those kinds of things, right? This is volume based on price. And that's what you really want to look at pre-market, if at all, frankly. Do I do a lot of this? Not a ton. I'm aware of sort of the gist of what happened before the bell rang, but this is where we are. And if you notice, this was basically all Asia to Europe. And then I know those aren't straight lines, but you get the gist. So right after the first cup of coffee in New York, start to see there's a little bit of an upswing. Okay. So there's different financial centers who have different opinions of what's going on in terms of equities and metals and indices. That's just a look at the S&P. There are many other symbols that trade 23 hours a day, practically all day long. And S&P is one of them. Gold. A lot of these are moving far before the Wall Street bell rings and far after. So that's what we've got right now this morning. I'd like to see the S&P move up a little bit. If we can get near, I'd say anywhere between 5,900 to 5,915. I've got a long SPY position open right now. Now it's been open and it's already hit a T1, which means we're at the break even. Again, this is just exactly what we do in the Sector Secrets Mastery. There's a very specific process to scaling in and scaling out that I teach. So that's what we're in right now. We're in this in the SPY calls. We've already paid ourselves, and now we're protecting that. Put a safety net, if you will, underneath it. And if we can hit a T2, great, T2. But really what that's going to be is closing out this trade, because it is an October 21 SPY call. So no matter what, and there's no gap here, no matter what, we're going to take some money off the table. Would love to see a T2 to close. And that'll be how I manage the SPY calls that I have today. All right, what else is on? What else is being managed today? And what else am I watching? Let's keep an eye on NVIDIA. We have a long position in NVIDIA in the mastery, but that means I've got to watch what's going on in three other places. One, at the top of the food chain, you've got the NASDAQ. So looking at the NQ, and what we have here is kind of a very similar look to what we just saw in the S&P, right? Right now, it's an inside candle, actually. We haven't gone higher than Friday's high, and we're not lower than Friday's low. It's just stuck inside the range. The next thing I want to look at then is the number one sector within the NASDAQ, which is XLK. Now, unlike the futures contracts that have been moving and grooving, one of the things that we'll wait on is what is exactly XLK, which is Apple, Microsoft, and NVIDIA. What do they have in store for today? There's a little bit of pre-market action, but I won't put much weight in the pre-market action of the stocks any more than I do, presuming that's going to be the gist of the day. I'm not going to put a whole lot of emphasis on it, but you can see here, this is what NVIDIA is doing. So much like we saw around 7 a.m., things are creeping up in the US, kind of something similar on NVIDIA there as well. Now, if I am looking at the Dow, and we're getting past the earnings for financials. Now, remember, gang, we're in earnings season. So I'm just trying to get past the financials, the bulk of the financials earnings. And how do I track that? One of the things we do in the mastery is we look at earnings, not what's coming up today, not what's coming up tomorrow, not what's this week. That's too myopic. That's too close. What we want to do is look at what's coming up over the course of the next couple of weeks, what's coming up over the next couple of, really almost couple of months. And that puts me in a very different perspective of preparing for earnings, because now we can play that ramp up or that rally into earnings, not that very near-term volatility crush, binary up or down reaction, which I don't like. So if I'm going to take a look here, what do we have earnings-wise? Well, now we're kind of moving on to a different, it's amazing how the sectors are sort of clumped together with the earnings. So financials are in the rearview mirror. Great. That's one less thing to have to deal with during this blasted season. And now we have a little bit more clear open skies, if you will, with XLF, the financials. And ultimately for us, that means that, yes, there will be things that affect financials, mostly coming from down movement itself or individual movement within things like Berkshire, JP Morgan, Bank of America, Wells, Citi, etc. This could be an interesting place to look for a couple of reasons. Number one, we've got a trend. Number two, we've got plenty of green bullish candles, right? And then that just means that I'm going to be focusing on the daily price movement range for entry. And that's really where, once we get past earnings, we can get back to dealing with sort of normal action without the volatility of this binary event. Again, on or off, up or down, dramatic moves. I think a lot of you have seen that. I don't want to be caught up in that mess, not as a short-term swing trader, or even as a slightly longer term swing trader. If I've got a longer term position, meaning I've already, for example, eventually we're going to have earnings in McDonald's, right? I don't know when it is, but I've got a longer term position in McDonald's. All right, maybe that's maybe a bad example because we're almost $70 up on that position. Let's talk about something like Mondelez, right, where we've got a position built in the $55, I believe. It's 55. To remember what that level is. But anyway, we've got a position in Mondelez. All right. Now, give or take, once earnings comes out, I'm not really worried about whether or not it moves up 10%, 7 points up, 7 points down. What I'm more concerned with is, what is my cost basis? What have I paid for this thing? And unless that cost basis is within a typical, say, 10% move of where we are right now, I'm really not going to worry about it. And I think a lot of folks who have longer term earnings, because they see these dramatic moves in these earnings releases, are concerned about their longer term positions. This is the chart that I built that longer term position based upon. So if I built, and I'm trying to remember where we bought Mondelez from, but for now it doesn't matter. But unless I'm going to be in a situation where I could come back down to that level and then lose money from there, I'm not going to worry about it. Somebody was asking about Apple the other day, and as far as what I would do with earnings, I said, depends on where you own. It depends on where you own the stock from, because again, plus or minus even 24 points. If your cost basis is something closer to what I teach, which are much more classic, longer term, and less frequently visited levels, like an anchored VWAP on a weekly chart, a 200 on a weekly chart. Look, unless this thing's going down to 160, and that's a heck of a problem, right? It's just a little bit of noise. And just kind of keep in mind, especially for your shares, give or take 10%, even to the upside, even in your favor, it's really not a lot, right? Be able to take that kind of move, right? If your mental shock absorbers are aligned to plus or minus 10%, you're going to sleep a whole lot better at night. Which reminds us, don't buy at higher highs, because a person buying the dip, let's say someone bought this dip back in here at $1.30. Do you think that person cares about a 10% plus or minus up in here? Not at all. However, let's say you're one of these folks, there's plenty of retail traders and investors out there that bought it instead of 130, they bought it 230. Do you think earnings are going to be a little bit of a white knuckle? Yeah, absolutely. And that's the difference between buying a dip and realizing that momentum is going to oftentimes leave you with a much more vulnerable position. All right, so then John asks about C. Sure. C would be related to that XLF narrative. So then this is where I would go with that. John, I'm never going to presume, but I'm guessing you've been here for a while. You've probably already done the due diligence of recognizing whether or not C is an outperformer. Now, there's not a lot that we don't want to trade in financials. C would definitely be one of the trends. So this is really an easier conversation about what we don't want to trade. Berkshire, no thank you. Even JP Morgan is a no thank you. No thank you. Chubb is a no thank you. What has a trend? Really simple. MasterCard, Bank of America, Wells, Goldman, American Express, Morgan, and there's your Citi, John. So that's definitely something that I would keep an eye on in terms of movement to the upside. And another thing to keep in mind when you're looking at what is it that you're gonna trade, what type of symbols do you want to look at? Gang, my goal is to make the stock market as small as I can, because it's a huge place. It's a huge place. So I can make it as small as I can. What I can then do is focus on very specific sectors for opportunity. So we looked at XLF. Let me open up SMH. There's very specific sectors that have the most impact on the broader averages, meaning S&P, NASDAQ, Dow, even the Russell. And if I know what those sectors are, and I know what stocks are in those sectors, I know exactly what's moving the market, meaning S&P, NASDAQ, Dow, the market, right? And I know what the relative outperformers are. And then I can take this sea of 3,000 stocks, most of those 3,000 are not going to have open interest sufficient for options traders. But I can take that C of 3,000, 1,000 stocks, and I can reduce it to a manageable, nice, beautiful, underwhelming, maybe 2, 3, 4 dozen names. We don't want to cast the net into the pond, into the waters, and pick up all the fish. That's not the goal. We want the best. And that's a much more discerning process as opposed to just throwing a net out there. The best way to do that is, again, this alignment process that we teach in the mastery. One is looking at the index. So that would be, let's say I'm looking at the S&P. One is looking at the index. Two is looking at the sectors weighted within the index. And we went into a deep dive on that on Friday. So if you're thinking, Rag, I don't know what those are. And I don't know why you're so confident about the long side, because all I'm hearing is about, things are going to pull back. Someone was, kind enough to say, Rag, I know you're bullish, but I keep hearing there's going to be a 5 to 10% pullback, right? So unless we know whoever's saying that, right? Unless we know why, what could be the trigger, when, what sectors are going to be affected, or is it just a widespread fight? So be careful listening to warning things like that, because they're not really warning. They're not really trying to help. They're just trying to get your attention, which is a very different thing. So if you go back on and take a look at the Friday video, you'll see that I've taken each one of the sectors and I've broken them down into where they belong and then where they are right now in October in terms of relative outperformance. So this is where, gang, there's a lot of stocks out there. Most of them are completely, utterly illiquid when you take a look at the option chain. And those are not things that really, frankly, you want to be too concerned about or spending your time on. If there is not at least 500 open interest on the strike that you want to trade, if you're trading that option, pass on that. It's really important to understand that the entire stock market is not something you need to watch. It's very specific names that belong to a very specific group. All right, with that in mind, I can tell my dog's about to start barking, so I'm going to cut it. I'm going to cut it here today. Thank you, as always, for being here for Charts and Coffee. You can check out what we're doing and a whole lot more over at sectorsecrets.com. If not, I'll see you all tomorrow, same time, same station. Upward and onward, gang. Be good to each other.